Ladies and gentlemen of the crypto space, we're live at 11:28 a.m. on a Wednesday. We literally got the inauguration going on right now. What a dramatic political morning. Frankly, it's going to be a dramatic political day. So you got to understand, if this is a light show, it is what it is. Exciting and disappointing for many people. Dramatic is probably the best word to describe what's going on. But we have a lot going on in the crypto space that's overwhelmingly worthwhile to talk about, meaningful and insightful, and we need to talk about some concepts and ideology that are to everyone's benefit. There's a lot of people participating in the space. A lot of people have value allocated. There's a lot of emotions going on right now, and that's the title of today's stream: Time Horizon and Asset Story, Emotions and Investing. And these concepts make a critical or a critical component of the value allocation process. Time horizon is extraordinarily meaningful. Our goal is to uh, obviously retain as much value as possible, but also experience appreciation of value over longer periods of time. A lot of folks misinterpret their desire to gain wealth as something that's necessary to do in a short period of time, and that is good part due to emotions, and it is probably best said as detrimental to one's own personal interest to expect short-term rewards. If you could gain $1,000 today instantaneously in 5 minutes, or you wait a month for $10,000, come on. I would anyone in making the proper emotional decision would wait the month for the $10,000. It makes such a massive difference. So how do we make these types of decisions? That's what we're going to talk about. Excuse me, still sick. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social good. Stop depositing on exchanges, not your keys, not your crypto, non-custodial, DeFi, or nothing at all. Let's pop it over to the main screen and what's going on and who's in the stream. Captain Weber's is the house. Always a pleasure. Thank you for joining. I know a lot of people are going to be distracted by inauguration. I myself, when we get off, are going to pop that on. I got to keep apprised of the political situation in the country because it's all related: politics, economics, equities, the crypto space, um, the global fiats. I'll pull up the DXY. Don't get me wrong. So this is quite fascinating. We're pushing down below trend, and we got to look at the DXY. A lot of folks, historically, the prevailing uh, uh, relationship between the dollar and equities and crypto assets, just to the like, are of inverse correlation. Dollar increases in value, assets decrease in value. But worthwhile to note is that this past weekend we saw a rip to the upside for the dollar. So Friday night, Saturday, and a good part of Sunday morning, a rip to the upside for the dollar, and significant altcoin appreciation. Extraordinary altcoin appreciation. It was pronounced, it was meaningful, it was far from trivial. Just rips 50, 60, 70, massive percentage gains. So that's the story. The story is, as everyone wants to firmly believe that there's an inverse correlation, stories change, and there's not necessarily an inverse correlation. Maybe there is a correlation. Maybe it doesn't matter. Maybe what matters is the price action of the chart. That's what I say all the time. We like to think that the chart tells us what's going on, but the chart really just gives us insights. And we have to fill in the story based on our own personal experiences, what may play out. So there's no reason to say that a rip to the upside for the dollar can have a depreciative effect on asset valuations. Maybe equities, given their extraordinarily inflated state. The crypto space isn't at that extraordinary inflated state, historically speaking, considering how far departed from the mean we've gotten, especially in 2017. And maybe the story, maybe the narrative for the crypto space is different this time. DeFi 2020 proved empirically there's something different. That did not exist in 2017. The ICO craze was shallow and trivial and hollow, but these DeFi protocols are far from that. And this is something that was exciting that I saw emergent in 2020. These DeFi protocols, and I post about this on Twitter all the time, are literally fundamental building blocks that are analogous and comparable and equivalent to the structures that exist in the actual real financial system, done electronically, done without centralized control. Obviously, there's projects that have key control, their private keys that could access the contracts, and but there are indeed not just efforts to be decentralized. There's Uniswap V1 is still online. Uniswap V1 cannot be shut down unless it's not possible. It's Ethereum would have to go away. So it's different. That's what we talk about, how DeFi is comparable and does what the legacy financial system does, but it's doing it in the decentralized, at least intentionally decentralized or attempting to be decentralized way, which is not like the legacy financial system. So there is, no matter what anyone thinks, something different about what's going on in 2021 versus 2017. 2020 provided empirical evidence of that. So this definitely affects the way the story of 2021 is going to play out as compared to the extraordinary inflation that we experienced in 2017. All signs point to such appreciation like we experienced in 2017, but it's different. So what does that all mean? We don't ever necessarily have the correlation or inverse correlation to the dollar. We've seen cases where they behave both ways. This past Friday night, Saturday, and Sunday morning was correlation. We've seen historically inverse correlation. So really, that means we have to rely on chart data to tell us what's going on. And what we're seeing on the screen right now is quite interesting. So notice that we're seeing a bearish break to the downside of Bitcoin, but it's not pronounced. We're not seeing a breakdown. We're seeing very oversold conditions on the 4-hour, completely flatlined oversold conditions on the daily. And if you look at the daily, there's always margins of error. And we've seen a significant rip to the upside on the daily from its bottom point. So there is buy support. This is this is an observation indicating there's significant support in this region. You go out to the weekly, which is nice to see a reset. Note that in a bullish market, you'll see it. Look what happened here. Look how the stock was completely overbought for an extended period of time. Peter Brand says that in extraordinary markets, you'll see the oscillators completely overbought. And they'll just stay overbought, and it'll just keep going up. We've seen it historically, and we're seeing it right here. Sorry, guys, excuse me. But notice what's interesting is the pullback. So the pullback is pressure relief, and that reaffirms that there's definitely room for price action to go back up significantly. So looking at the 4-hour, the daily, and the weekly, it looks really bullish to me. And this is a very common pattern that many folks draw, their A, B, C, D, Elliott wave type stuff, whatever. Point being, a dip down and then bam. So that's the fake out breakout type pattern. At least that's the phrase that I've used historically. And, it could break down, but look at this. Look at the support we have down at 31,800. 600, the 31,000 region. We have a 200 EMA in the 4-hour. Let's see where the 200 EMA is in the hourly. So we're below that. So we look to the longer term charts to see where downside price targets can be. So, no one's going to complain if, can I delete this? No one's going to complain if the price action, you break down from the triangle, break up, maybe, yeah, fine. Support flipped resistance would be the best sign. A retest, but a higher low and then a breakout. No one would complain about price action like that. So I'm seeing upward pressure, obviously a bearish break of trend formation to the downside, but there's so much upward pressure here. It's very interesting. So it's not a breakdown, and you see Let's go out to the daily and I'll show you a breakdown. Breakdown is very different. A breakdown is when the overall market sentiment, boom, that's a breakdown. So definitely trend support, a lower high here, higher lows. Check it out. Not necessarily the chart arrangement I would like, but there you go. You got higher lows, and then a break to the downside, and then a bearish breakdown where there was consensus that selling should occur. And this is a perfect example of literally what we're not seeing right here. We have a massive symmetrical triangle, and we're seeing loftiness, upward pressure in the face of a subtle bearish break to the downside of the trend line. So what does that mean? We'll see. And this comes back to really what I wanted to talk about with the title, but let me see what's going on in the stream. Yeah, I sound a little bit better, Captain Weber, but yeah, man, it's still hitting me. Charlie's in the house. Always a pleasure. Matt's in the house. Hola. Aloha. Dauber's in the house. Biden taking office. Yeah, stimmy pump soon. I don't, that's just a reality, and we'll see what happens over the coming days and weeks as that, financial liquidity enters markets. Charlie G held it hostage. Well, my man. Lisa Marie, howdy. Welcome. Porca, uh, Gabriel. Gabriel, how do I pronounce it? I'm horrible. Uh, Lisa Marie, shout out to my girl Crypto Chick. Yes, Crypto Chick. Yes, indeed. A pleasure. Poopo, poopo, poopo. Hey man, good to see you. This puzzle of percent portfolio BTC versus ETH, I should have it killing me day by day. Can't make up my mind. Yeah, so what you have to do is nothing. Um, you have to pull back and zoom out. Uh, and it's a great debate, and it's going to be a personal decision what you make in the end. Bitcoin fits the global macro financial narrative as a pristine collateral asset, as eloquently described by Raoul Pal, and obvious to so many people that also subscribe to the narrative that he paints. Um, Ethereum does not fit that bill right now. It's not viewed as that by institutional investors, corporations, whatever pensions that may get involved, so on and so forth, insurance companies. So it's not fitting that bill. But we see what is occurring with Ethereum is profound. What occurred last summer, DeFi 2020, and what's really starting to occur in 2021 was some significant assets looking to really outperform. I mean, Uniswap is doing $1 billion a day in transactions. You're talking about a decentralized protocol, one of the more decentralized protocols, the crypto space, so on the planet. Um, and and this is brand new. In 1 year's time, this protocol is doing $1 billion in transactions a day. The monetary velocity, the exchange of value, the borrowing, the lending, the debt. This is just an explosion of monetary velocity. Those are components of monetary velocity. Amount of circulating supply of asset value versus borrowing and lending, and that's extraordinary. It can't be diminished, it can't be overstated, and it's real. So, what does it mean? It means that Ethereum is an extraordinary platform, and there's a lot of folks on Twitter that tout that it has more potential upside than Bitcoin. Sure, but value storage, that's the narrative really going for Bitcoin. So I personally, I lean towards Bitcoin for value storage. I guess what, so if Ethereum's going to outperform, you don't need as much of it in your portfolio. It's going to outperform, so when an asset has more potential upside, you hold less of it. How about that for to throw you for a mind loop? Most people think, "Oh my God, this thing's going to the moon. I have to own as much of it as possible." No, in a rational, well-structured portfolio, the asset that has the most upside potential, you want less of it, because if it has that much upside potential, it also has downside potential. More risk, more reward. And if it has that much upside potential, you don't need as much of it to have a significant impact on your portfolio balance. So for me, considering that type of rationale, I hold less Ethereum than I do Bitcoin, significantly less. Ethereum, no doubt, is one of my larger positions, but interestingly enough, Ren has grown to be probably the largest non-Bitcoin position in my portfolio, but it has grown to be that. That's the most important point I can emphasize. It has grown to be that. It was a tiny portion of my portfolio, and now at this point, it's like it's way over 10%. Not way, like 12% of my portfolio. And that's just because it has grown. It has extraordinarily outperformed Bitcoin and Ethereum and the macro assets. And that's just because of the role it plays in the story, the narrative that we have of it. And here's the kicker. Here's the most important thing. The story has never changed. I grabbed my positions in Ren in March 2020. Some people got in earlier, 3 cents. I got in at 6 cents. But the point being, to this day, the story has never changed. And how we allocate value in our portfolio, that's it. It's all about the story, the narrative that we could tell about these assets. And there's only two reasons to liquidate a position. If the story significantly changes or time horizon. If the story for an asset, let's say an asset has a 1 year time horizon, you expect maybe in 1, 2, 3 years, like the Polkadot assets or the Cosmos assets, to really start to gain market share in like 1, 2, 3 years. And that's really the time horizon I have for Polkadot and Cosmos and Elrond and Cardano and the non-Ethereum type ecosystems versus something that could imminently appreciate 1 month, 2 month, 3 months, 6 months. So that's another reason to maybe readjust portfolio allocation in the short term. And in the back of your mind, you got the FOMO, you got to reallocate value in the future to those longer term time horizon assets. And these are just extraordinarily interesting considerations in how we construct our portfolios. Let's go back to the questions and see if I'm missing anything. Igor's in the house. Hello, Noah. Can you check FBTC? Let's check it out. FBTC. So Ethereum has been significantly outperforming Bitcoin. Significantly. Well, Bitcoin's been trading horizontal. This is massive, actually. Check it out. That's the kicker. That's what I just said. Just because an asset is outperforming doesn't mean you reallocate a significant portion of your portfolio to it. You want less Ethereum than Bitcoin if Ethereum is outperforming Bitcoin, because Bitcoin, we over enough of a time horizon, whatever the dip is, the macro narrative is that it's going to appreciate over time. It's a sound money asset. You can listen to Pomp for all the hyperbole about it outperforming over time. But that's the narrative of Bitcoin. So you want less Ethereum because it's going to outperform, which means it's going to have a dramatic effect. A smaller portion of your portfolio is going to have a dramatic effect on your portfolio balances. This is incredible, actually. 70% versus Bitcoin in 2021. Wow, pretty cool. So, this is not the most important thing that I've learned over the years is that folks will take their Bitcoin and sell it for Ethereum, and Ethereum will go up, and then they'll sell Ethereum for Bitcoin. Sure, there's a trading component that people could apply, but that's not necessarily the type of portfolio management that I advocate. And I talk more stories and narratives and long-term trends and structures and patterns, and more of a relaxed type of approach to money management, where you get to sit back and you get to think and you get to understand the markets and really appreciate them for what they are and how they're performing and their future. And this is all part of our future. And that's extraordinary to not only start to understand, but really truly appreciate for what's occurring and participate in it. And when you're doing that, when you're participating in it and you're understanding, you don't have to FOMO, you don't have to have the emotional responses. What you're doing is sculpting and crafting a well-structured portfolio to best reflect the vision that you're having of the market, where it is, and what the market speculatively will become. Excuse me. Stelios, I feel I'm always losing profit by not switching percentages to my profit. Maybe I'm too greedy. This is exactly what I'm talking about, and that's called chasing. You're trying to chase the pump. You're trying to chase the asset that's outperforming. But listen to what I just said. Let's say you have a Bitcoin and you have $1,000 worth of Ethereum, and Ethereum rips to the upside, and you sell a half a Bitcoin to buy Ethereum. Sure. You could try and catch a top. You could try and catch a trend change and reallocate the profits to Bitcoin. But that whole time, I bet you folks are going to be nail biting. They're going to be staring at a computer. They're going to be holding their ledger, pushing buttons like, what do I do? When do I do it? I don't want to lose any money. You have to redefine money and value. And my recommendation, that is, of course. And you don't need to do that. Just trust your instinct, to trust your gut. Attempt to divorce yourself as much as possible from emotions. They're the most of the time emotions are going to lead you in the wrong direction, and logic and reason prevail. That's just the bottom line. Charlie, thank you. Smack those thumbs up buttons. 21 people in the stream, 8 likes. All you gotta do is click a little thummy. Come on, boys and girls, hook it up. Barry, what's up? Rent is being price appreciated. I mean, the narrative for rent is extraordinary. I mean, you got to remember that the narrative for rent incorporates not just Ethereum, but you're talking about Polkadot, Cosmos, and Polkadot and Cosmos are not just Polkadot and Cosmos. Polkadot is an ecosystem of ecosystems. It's a blockchain of blockchains. Cosmos as well, and Red is obviously applicable to Cardano, Elrond, whatever, EOS, Tezos. Pick a portfolio, an ecosystem platform. It doesn't matter. The concept that Ren implements has one of the largest reaches and scope of just any asset I could possibly think of. The reach is broad, expansive, immersive. It's just and to top it all off, the boys that are working on Ren, Long and was it TZ? These boys have a certain clarity to their mind, which I won't dwell on, but I've discussed it before. Knowing persons that are unique and special in their capacity to see. And that's the thing, coders and game theory. It's not just thinking about like strategy and coming up with ideas. They see it. I'm able to say that because that's the way I look at programming Android. I see patterns and structures and colors and poetry just thinking about code. And if I'm thinking that relative to the Android, and these types of people are thinking about this with regard to these types of projects in the crypto space, yeah, that's a big deal. We got the right people doing the right things, like Andre and Bantag working on urine. These are people that are outperforming human beings. These people have a vision and a mental capacity that far exceeds the average. It's extraordinary. Um, More people see the narrative. I hope, Barry. Charlie G means pie. It's a good asset to accumulate, but really the narrative for Ren isn't the appreciation of the asset. It's the bonding of Ren for a dark node and the monthly revenue the dark node produces by being a significant component of the DeFi financial infrastructure. Did you like my man thoughts on staking Cosmos through Ledger Wallet? Sure. I'm not a fan of Tezos, but Cosmos is one of my larger positions, and it stakes through Ledger. In fact, unlike Polkadot, Cosmos, you're able to delegate directly through the Ledger wallet or directly through Ledger Live, the user interface. So it's really, really convenient to delegate your Cosmos to earn a continuous revenue stream. It's an inflationary asset, but Cosmos is so uninflated relative to its potential market scope and reach that even though it's inflationary, if 2% of the planet are even aware of it, yeah, it doesn't matter. It could appreciate significantly over the years. Igor, thank you. I really appreciate it. I hope I help folks. And, this isn't for money. I don't do this for money. I do this because it's a way for me to help myself better my understanding. It allows me to digest my ideas, evolve my ideas, hone my ideas, and it allows hopefully to help people. If I'm able to express these thoughts to other people, hopefully I can help people achieve the success I've achieved and make better decisions for themselves, their friends, and their family. Lisa, yes, thank you. It's good ideas. Folks come with good ideas in the stream. It makes a big difference. Jay Young, what are your thoughts on the Bitcoin cycle? Will you be liquidating some of your positions at the end of the year? No. It deviates from something that I've come to personally subscribe to. I'm tired. I've worked. I'm young. I'm 37, turning 38 next month, but I'm tired, and I like to think it's not entirely emotional. But I'm also angry. I'm disappointed. I'm disappointed in the status quo financial system. Doesn't live up to my expectations. It's not what anyone hopes for when they're starting their career, they're leaving college and starting to work. It's not fair. It's just not. It's not fair that so few have so much, and that smart people can't necessarily don't aren't put. They can't, not assuredly, but they're not guaranteed exposure to potential opportunity. There's absolutely nothing fair about capitalism. In fact, it's complicated how financial systems are crafted because it's really natural capitalism. It's survival of the fittest, and that's why it's been fully functional. But there's just something that's unfair about it, and I just don't subscribe to it anymore. I don't want to participate in it. I want out, and that's my choice, and that's what I believe. So Jason Williams and Pomp, you just accumulate as much Bitcoin as you can, and over the coming years, and the Winklevoss twins, they'll say the same thing. If you could hold through a bear market, it doesn't really matter. Could you imagine buying 1,000 Bitcoin at $200 or 1,000 Bitcoin at $20 and holding through the bear markets? You're a multi zillionaire at this point. So I want to think long term. I want to think time horizon, and that's my time horizon. I'm 37, turning 38. At 45, 50, this I'll be done. I won't have to even think about trading time for money. Just accumulate Bitcoin and as much as you can, and all things point to even gold. Um, and some strategic equities as well, like commodities over the next 10 years. And Raoul talks about emerging markets just printing capital for the next 10 years as they intentionally devalue the dollar. So, that's the whole point of the stream, is to set yourself up so you don't have to worry long term. So stop worrying short term. Start thinking long term and plan for, your financial future. Because I know, whether folks say it or not, most people subscribe to a lot of my ideology. You don't want to trade dollars for work, but you want to work. You might want to do something else, or you might love your job, but you're sick and tired of um, not being able to get ahead financially and not being able to achieve what you're financially interested in, and that's just should make you angry. Which and the anger, if you could redirect that to making different decisions, and not different decisions like, yeah, I'm going to invest in an asset, but different decisions like, even more so than that, like, oh, maybe I'm not going to invest emotionally. Maybe I'm going to try and force myself to reorient my view and the story that I understand of these markets and what they are and how profound they are, and that maybe the financial system on the planet is changing. Maybe what people are saying, that in 5 years we're not going to have any paper money. The central banks around the world are going to be all digital, because then they're going to be able to print money at the Federal Reserve level. Everyone's going to have a Fed account. They're going to be able to airdrop you money, and they're going to force you to spend it by the end of the month, and that'll spur monetary velocity through the roof. Maybe they'll even provide government employment, and literally everyone in the country will have employment, so they'll be able to print M2 digitally through the stratosphere and just give people money. And because government's just giving people jobs, they'll be able to ramp GDP through the roof. And that's basically the MMT principle. You can print as much as you want, but you have to keep GDP up. And that'll prevent the runaway inflation of consumer prices, because supply and demand will be in equilibrium. If everyone has a huge amount of money and they're chasing the same amount of goods and services, that's where the price inflation comes from. Fewer goods facing stronger demand. But if everyone has more money because the government is giving it away, and manufacturers are forced by mandate or just by economic incentive or whatever to either keep their production steady or ramp it accordingly to balance the supply and demand equation, You could literally turn inflation into a financially controlled strategy. Either ramp, just like they do with oil, just like OPEC does with oil, either ramping or cutting demand to drive down or drive up prices. A well oiled country could theoretically do that with the goods and services system. Um, and then I mean, obviously that's putting an enormous amount of responsibility in the hands of the government, and that's the antithesis of capitalism. It's the opposite of a free market. In theory, it works. And what theory? Modern monetary theory. Google it. Modern monetary theory is what everyone's talking about is the way the system is heading, and that's more government. That's a massive government. That's where the government is literally everything. And historically, the government, you put too much trust in the government, they lead you in the wrong direction. So who knows how things are going to play out? But these are the observations that I have of the markets and the system and the financial system and how it's heading. And we try and position ourselves as best as possible to be in front of these changes. So that's my thoughts on the Bitcoin cycle, Jay Young. 11:59, but I want to answer these questions, so let's keep it going. Thanks for calming us down and for being the voice of consciousness that agrees with ours most of the time. When we want to FOMO. Stelios, that's what I'm trying to do for everyone, and I still struggle with it myself. But that's the point of this stream, to try and make better decisions. I keep buying more Digibyte. Can't help myself. Sounds irrational. The asset is depreciating. That doesn't mean it can't appreciate, but unless the story changes, it will continue. Trends continue until they stop and reverse. Based on the technical data, I see no reason that the trend is stopping and reversing. There's been no 200 EMAs to a break to the upside. There's been no break of the falling wedge to the upside. And it's just depreciative. It's in the face of the extraordinary macro asset, Bitcoin and Ethereum appreciation. So it's definitely not taking part of the DeFi rally. You're talking hundreds and hundreds of percent for some of these assets. And unfortunately, it's still depreciating. So greater risk, greater the reward. Clearly, the fundamentals of the DigiByte platform are extraordinary. The protocol is probably the best UTXO protocol in the entire crypto space, but that's mutually exclusive from the price action and the time horizon. In 1, 2, 3 years, the story could be very different. And if the story changes, that's the whole point. It may warrant value allocation. But if the story right now is it doesn't fit a macro narrative like the global financial system, like Bitcoin does, or it doesn't fit a business narrative or a financial product and service narrative like the DeFi space, which is on fire, then the story is bearish continuation. And that's just me being honest. Love Digibyte. I just don't see the story changing in the short term, and don't. I encourage folks to make the best financial decisions possible. So don't allocate to a value that's depreciating. You want to buy things that are going up, but you want to buy them at the right time. Complicated. Lisa Marie, I hope I'm helpful. Thank you kindly. Peter Stover, any word on Shapeshift? Every time I try to swap their, yeah, well, they significantly changed their business. They were centralized, and now they're just plugging into the decentralized financial infrastructure. Uniswap is doing $1 billion a day. You go over to the Dex tracker on DeFi Prime, the numbers are extraordinary. This has got to be catching the eye of venture capital, just like they must these venture capitalists must be trying to throw money at whoever they could find. I mean, Uniswap's doing $975 million today. SushiSwap, which was picked up by the FTX, the centralized exchange, $436 million today. 0x has been ramping up. That's crazy. So that's really good to see. Curve is probably one of the most important projects in the the crypto financial system. Um, just technologically innovative across the board, totally integrated with synthetics at this point. And 1inch, which is a DEX aggregator, hitting Uniswap, hitting SushiSwap, hitting 0x, hitting Curve, and literally pulling liquidity from every single AMM on this chart. So Curve, 1inch is the gross of all of them, and they're doing a fair amount of value in themselves. Incredible. Um, Let's finish it up. Are you up to date on Digibyte version? Anything new? Nothing new on Digibyte. The value is depreciating. Please allocate value accordingly. Listen, if you're going to apply value to Digibyte, I think it has the potential for incredible upside. And as I just said with Ethereum at the beginning of the stream, we could rewind it. An asset that has an extraordinary asymmetric appreciation potential, you want a small amount of your portfolio allocated to it. 1% of your portfolio, Digibyte becomes what I believe it could possibly be, the perfect decentralized blockchain. It has critical mass decentralization for asset storage and record management. It could go 1,000 times on its money. You know, you got $1,000 of Digibyte, and it goes 1,000 times on its money. On the money, you got $1,000,000. So all you need is a small amount of your portfolio allocated to a depreciating asset. Just being honest. No, I do not participate in public or pre-sales. I don't talk to any of those types of folks. Stake assets enjoy token price appreciation straight from the Sidemen playbook. That's the name of the game. We got assets that are producing recurring revenue streams, sustainably sourced yield from transaction fees, no doubt some of it from inflation or governance token emissions, but what's being created is value left and right. These platforms are minting governance assets that literally appreciating in value, not irrationally, not by FOMO, but because literally there's significant value in the governance assets. The governance assets are being used to control the parameters of uh, of these projects, and they're being used to give people rights to a revenue stream, profit sharing. There's extraordinary value in these governance assets that are minted for $0, so they're worth nothing, but the market gives them value. That's an extraordinary phenomena that literally was created in 2020 and proven empirically to actually be occurring and be sustainable. Rook keeps rock and boom. I mean, Rook is crazy. I most of my position in Rook was mid 60s, 65. But when Rook hit like 370, dipped back to 300 and change, I took the time horizon for Rook is imminent. We're talking about 10 days left, 11 days left for Rook emissions, the liquidity mining to cease. So I've allocated more. And if I had more free liquidity, I would allocate more to Rook. Rook is Keeper DAO is from the Ren team, and it has the potential to be one of the most. It is overwhelmingly the most. There is no competition. The most unique project in the crypto space. So obviously, I have a large position. And I'm also providing some liquidity. It's the yield is not what I'm looking for. What I'm looking for is the Rook. The intention is to accumulate as much Rook as possible because there's no reason this can't be $3,000 a Rook. Absolutely no reason, especially considering what's most important is the damn treasury. Look at the treasury. Rook is a money printer. These boys are extracting value from the crypto space in the tune of millions of dollars. And could you imagine if it scales? Can you imagine if they scale it or enhance the theory, the game theory that they deploy, that the keepers deploy? It's just the arbitrage and the front running of liquidation and the front running of transactions. And if they enhance the algorithms and just deploy additional concepts, I think there's tremendous value potential for a recurring revenue stream with the Keeper DAO platform. This is probably the most exciting project I could think of right now. But that's probably also yeah, it's hard to say, man. There's so many incredible projects. They're all just extraordinary. So you can't own everything you want to own. Most important thing I could say, and folks know, I own not much. I'll give you a total. One, my large positions: one, two, three, I have 5 large positions. Boom, that's it. Well, 6 considering Cosmos that are relatively large positions. And the rest are smaller positions, small parts of my portfolio. But I think they could significantly outperform. Aave might be one of the smallest positions I have, but Aave can literally become a component of the future financial system. They have a banking license in the UK. Could you imagine in 3 to 5 years them basically being a bank, giving people 1, 2, 3, 5% return on their money when Wells Fargo is giving you 0.02%, or a bank in Switzerland is giving you -2%, or whatever the hell the negative yield, and all of a sudden you have a protocol that is maybe insured at this point through like Lloyd's in London. Like Cresco FinCEN is doing. So you have an insured interest bearing product in the face of a bank literally taking your money to custody your inflating fiat that's literally depreciating before your eyes. Thank you, Charlie. I appreciate it. I will be here. This is what I do, and this is I like what I do. I like talking. Are gas fees hurting the ETH network? I'm going to end on this one. No. There are 45 million millionaires on the planet. The ETH fees are nothing. They are zero. Nobody running around with $100,000, $500,000, $1 million transactions cares 1 cent, 1 iota about $100, $200, probably even a $500 transaction fee. That means nothing. So it obviously prices out retail. I find myself priced out. I know the captain found himself priced out. We talked about it the other day. And I find myself priced out quite often. I don't want to throw around $100 transaction, albeit I do when I need to make a portfolio change, but I'm not just clicking. No, that would make no sense. So it does price out a lot of people, but the market makers, the people that are going to make these protocols what that we are envisioning them to be, are not priced out. They're not, they don't hesitate for a second. Interesting, huh? Thank you, everyone, for joining. It's always a pleasure. I know we got the inauguration. A lot of people are going to flip that on. A lot of people angry and frustrated. A lot of people happy. So, to each their own. I'm not going to say what I am. What I look for is opportunity and change, and people doing better for themselves and their family. And to me, what that means is it doesn't matter who's doing it, just as long as I see good decisions being made. Wednesday, January 20th. Thank you, everyone, for joining. Expect those thumbs up buttons. 26 people in the stream, 12 likes. Press it. Press it. Tell everyone to subscribe. And as always, I will see you tomorrow. You all have a wonderful day now. Peace.